Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled, Enhance Your Portfolio Management Skills. Now, nothing is better than VectorVest when it comes to portfolio management. When to buy, what to buy, and when to sell, using our market timing and our trading system programs is unmatched. Right? The fact that we can give over 9,000 stocks every day a buy, sell, or hold rating and have that type of stock analysis again is unmatched. And that has been shown in recent special presentations, from the NPI presentation from a few weeks ago to last week. We have shown the power of VectorVest, and I'm going to go into the program, show you how you can view those most recent strategies of the week. So as the title of the presentation suggests, my goals here in this presentation is to show you how to enhance your management skills, make them better so that you can become a better investor. Now, over the years, I have found that I can no longer use the phrase, build your equity portfolio or show you how to build your equity portfolio. It has become instilled in me that I cannot say build without adding and manage your equity portfolio, because the two steps are vital in doing them both the right way. How to build and manage your equity portfolio are the two keys to successfully building, growing, protecting your net worth. So what are some ways that you can enhance your portfolio management skills? Well, let's ask a few questions. What if you could increase your leverage without paying margin rates, right? Without paying to borrow money from your broker? What if you could profit from falling prices with limited risk? What if you had the ability to generate steady income in your account? And what if you could get paid to enter long stock positions? And finally, and most importantly, in my opinion, is what if you could insure your positions or even your entire portfolio? Well, we can do that. A lot of it stems back to Dr. DeLito's presentation of the 7 secrets to making money with VectorVest. Always a very powerful educational experience. And of course, as you've heard me talk about before, I'm going to discuss secret number 5, which is learn to trade options. Options are financial instruments that can provide you, the individual investor, with the flexibility you need in almost any investment situation. Okay, that's an important concept to understand when we talk about doing better, protecting and growing your net worth. Because option trading is no longer just for hedge fund managers or institutional traders. Those days are long gone. It's now an important part of the individual investor's ability to protect and grow their portfolio. And again, when you pair the VectorVest market timing system with even the most basic option trades, you're going to allow yourself to keep your option trading risk low and the probability for reward much higher. Right? Both bearish and bullish market trends represent tremendous opportunities to make money. And the key to success is to use strategies and ideas that can generate profits under a variety of market conditions. Okay, to do this, it requires a consistent, disciplined system. Okay, so one of my purposes here in this presentation is to illustrate for you investments or trades that can prosper, again, in an up or down market. And that includes, for the more prudent or retirement-minded investor, the ability to insure or protect your portfolio in down markets. So again, as the title of the presentation suggests, my goals here are to show you how to enhance your management skills, how to do it better, how to take it to the next level so that you can become a better investor. So an option contract is a security, right? We'll start here. It trades just like a stock or an ETF. There's a bid price, an ask price. There are market makers who are tasked with providing a fair and orderly market. Okay, so keep that in mind for, again, those who are new to options. It's very similar when you're trading stocks. There are some variables though. Remember also that an option is a negotiated contract, right? It's an options contract with strictly defined terms and conditions. And finally, stock options provide the right, but not the obligation, to buy or sell units of 100 shares of a stock at a certain price by a certain date. These are the strictly defined terms and conditions that we're talking about. Okay, now there's a pretty simple way to kind of lay the foundation here of options. There are call options and put options. And I'm going to define those in just a moment. And there's only two things you can do with calls and puts, and that's buy or sell them. Right? You can buy a call or sell a call. You can buy a put or you can sell a put. Let's define what a call option is. A call option provides the owner the right to buy units of 100 shares of a stock at a certain price by a certain date. Okay, so the buyer of a call option has the right to buy 100 shares of stock. Okay, call options increase in value when the price of the underlying stock or asset rises. So it is clearly then a bullish trade. So if we look at a risk-reward profile here, with the x-axis here being the price of the underlying stock or ETF, and the y-axis being the value of the option. So we can see our expectation here is that the stock will rise. Right? As the stock rises, so too does the value of our option. The risk is the great thing about options, is that the risk is limited to the premium that you paid. Right? So it's it's called leverage, right? A lot less capital outlay, and so the risk of losing our large amounts are a lot smaller. And again, the reward is unlimited, right? Theoretically, the stock can go to infinity and beyond. So that is the profile of a long call option. On the put side, right, when you think of put options, it provides the owner the right to sell units, or where the name comes from, right? It gives you the right to put that stock to someone else. 100 shares of stock, again, at a certain price by a certain date. So put options increase in value when the price of the underlying stock falls. And so it is inherently a bearish trade. A great way to profit in a downtrending market, and also a great way to protect your portfolio or individual positions. So a quick look at the risk-reward profile here of a long put. Again, the x-axis being the value of the stock. So the expectation is that the stock will fall, and so the value of the put option rises as the stock falls. Now here the reward, parenthetically, is unlimited. Theoretically, the stock goes to zero. That's your max profit. So it's whatever strike price you bought minus the premium paid is your max profit. We don't expect any of these stocks to go to zero during the life of our trade. So that's just a basic review of a long call and a long put. Remember, the flexibility and versatility of options is endless, but understanding that you can buy a call or a put, sell a call or a put, lays the foundation for you to be able to use options to enhance your portfolio management. Again, you don't need a PhD in advanced options to properly use them for both protection and profit. In fact, we talk about the system, or the 5 pieces of the system that build on each other to learn how to trade options and manage the portfolio. So we talk about market direction just as we do with stocks. You have to understand and have confidence in your bias of the trend of the market, right? Short, intermediate, long-term trends. Nobody does it better than VectorVest. As I noted earlier, finding the right stocks, right? If you're bullish, of course, you're looking for good quality stocks rising in price. And I often say, take my retirement services hat off for a minute, I could care less if the market's going up or down, right? As long as I can recognize that trend, you can profit in both an up or down trending market. And so VectorVest will help you find the right stocks, whether it's an ETF that tracks an overall index or the proper underlying stock. You then need to find the right option. First of all, obviously, do I buy a put or do I buy a call option to profit? But there's more to it than that. There's determining the proper variables of the option, right? The strike price, the expiration date, and that all comes with trade setup. Again, the idea is to put probability in your favor by doing it correctly. And then finally, trade management for the individual option trades is of the utmost importance. Understanding how to manage that trade is really the only way you're going to be able to be successful. So I want to show a couple of case studies, again, to illustrate how important it is to have this tool in your toolbox to manage your portfolio. So whether it's using options to profit in upward or downward trending markets, or if it is to simply protect individual positions or your overall portfolio. So Chevron, here's a case study that I'd like to share with you. This is our Options Pro. It's called, it's just kind of a look back. It's called Options Replay, and it'll give you an idea of the history of a proper trade. So we went long call option on Chevron back on February, I believe it was February 1st of 2022. Now, using the VectorVest program, we can go in, we can see what sectors and industries are doing well. We knew oil was rallying at the time, petroleum companies, so Chevron is there. In this example, by one Chevron April 135 call at $5.75 per share. Strike price of 135 and expiration, which would be the Friday before the third Saturday of the month. These are the strictly defined terms and conditions. This is the premium paid. So for one contract, only $575. So what happened with that trade? Well, a month later, CVX, that 135 call, was then trading at 21.23 per share. That's a 269% return. Okay, and here's where the trade management techniques come into play. Okay, because just 2 weeks later, now this stock is up and the value of that option is now at 36.83 per share. That's a 540% return on investment. Okay, now our management techniques, the ones we show usually in our options courses, is that we would probably have been out of this trade. We would have taken our profit before there, or at least what we call the action level. We would have either sold some of these, well, if you have more than one contract, of course, I might have sold some of the option contracts. I might have just tightened my stops, or I may have just said, great trade, let me go ahead and take my profit, probably somewhere in this range here. Had you held all the way to expiration, you would have done really well on this particular trade. Again, this is just buying one, in this case, Chevron call option. So the great way it enhances your portfolio management technique is the leverage behind a trade like this. It's hard to go long and to buy stocks and be bullish even on the short term, given the overall downtrend that we've seen. So the idea of a lot smaller cash outlay and the risk management techniques involved make trading options a much needed part of your arsenal. So again, had you held all the way to expiration, which our techniques would never have us do, you'd had a nice profit. Using options to profit in a falling market. So I just want to show a quick example here. I have two, both the Qs, which is the NASDAQ 100. I use an SPY example. And I'll walk through these the same way. So I'm back on the Options Pro page here, the Options Replay, and we'll take a look. This is back on April the 12th of 2022. Now, whether or not you were trading in a downtrending market to profit or protecting positions that you may already own, let me go ahead and just kind of preface all this. I'm going to take us into a market timing graph. Okay, let's take a look at a market timing graph. I'll take off my support and resistance, and I'll make it a 1-year look back. I'm going to break this down so we have some more room here. And I just have the price of the VectorVest composite shown. If I come down to the lower left corner, I could add confirm calls, and this is what I was talking about earlier. Going back all the way to November of 2021. And all of the signals that we had in place for us to either be protective or trade in the downward trending market, and then those handful, and as we're seeing even right now, right, how long it lasts, I don't know, but if you feel compelled to bottom fish or to take advantage of what you may feel is an oversold market, I don't know that it's quite there yet, but you can take advantage of these things using the power of leverage. But in this case, April the 12th was a confirmed down call, a great time to either protect or profit in a downtrending market. Okay, so that's the rationale behind the trade. Okay, so the trade setup is here on that date. If you just, again, if you'd gone out and bought just one Qs, again, which is the ETF that tracks the NASDAQ 100, May 34, now remember, it's April 12th. If you'd gone out to the May 340 strike, that's right around where the Qs were trading that day. So it's an at-the-money put option. It costs $12.45 per share, or $1,245 to control 100 shares of a $340 ETF. And here are the details right here. So, well, as we can see, what happened? Well, a month later, those Qs were trading a lot lower, and the value of the option was at $48.45 per share, 289% return on investment. Remember, our initial fill price was only $12.45. Our techniques probably would have had us out here, or perhaps tightening stops, some type of action to make sure we didn't give back that nice gain there. And again, had you held to expiration, which we would never do, but you would have had a nice profit there as well. Which brings me to the SPY situation here. And now this is an actual trade in our retirement coaching group that was a simulated trade that we put into our account to illustrate how to protect. This is more of a protective put option on your overall portfolio. So we used the trade, went out and bought 5 SPY September 412 puts. In other words, an at-the-money put option to protect our portfolio. Now that would it cost $4,470. Now again, how many you buy depends on the size of your portfolio. We do have formulas that walk through it, but just understand roughly a $100,000 to $150,000 portfolio. Buying 4, 5, 6 puts on the SPY initially is probably a good place to start. The larger the portfolio, you can add to that. The smaller the portfolio, 2 or 3 will do just fine. Okay, in this case, we bought 5 and paid $8.94 per share, and that was on August 23rd. Okay, just over 2 weeks ago at this point. We know what happened to the market just a week later. Those SPY puts were trading at $19.10 a share, 113% gain. And then 2 weeks into the trade, the option was at $23.24, 159% return. Right? At one point intraday, again, this is the profit here. This trade was actually up about $8,000 intraday at one point. That's only 2 weeks into the trade. So again, risk management techniques might have had you closing that trade, maybe taking the profit and reinvesting, reevaluating the market and reinvesting in put options, perhaps. But again, you're in the driver's seat here. You're in control of managing your portfolio, because when the hardest decision is how much profit do I take on my put option? And which put do I buy with the house money, with my profit, to ensure my portfolio? That means you're doing things right when those are the decisions you're trying to make. So I wanted to take just a moment to go back into the VectorVest program and just again show you. I want to be clear that when I go to the Views tab, and I said earlier, no one prepares you to manage your portfolio better than VectorVest. Between market timing and stock analysis. And as I was putting the presentation together, I'm looking at the recent strategies and special presentations, and they're all about managing your portfolio. There's so many ways to do it, and VectorVest will show you how. Go to the Views tab, go to Strategy of the Week, and it'll explain to you all of the ways to do it. Okay, so it's not just the idea of building your portfolio, it's building and managing your portfolio. And secret number 5, adding options to your arsenal is just a great way to enhance your portfolio management skills. So thank you for taking the time to join me for this special presentation. And if you'd like to take another minute out, I'd like to tell you about our Options Jumpstarter if you're interested in learning more about options and building a foundation so that you can enhance your portfolio management skills. You can join us for the Options Jumpstarter course. Go to vectorvest.com/jumpstart. You have till Monday at 5 p.m. to take advantage of some special pricing. We'll go through from step by step, from building a foundation of understanding the terminology and all the theoretical things you need to understand about options, to setting up calls and puts, identifying the proper market trends, trade selection, picking the best option candidate, as well as the option criteria that's important to follow. And then, as I said, most importantly, being able to manage that trade, and then actually executing the trade, showing you how to go in and do that as well. So, step by step from A to Z, how to take advantage of the flexibility and versatility of option trading. With the course and the mastery package, you get 6 live mastery support sessions. The modules are archived in the VectorVest University, and then we have our live mastery sessions every Wednesday at 11 a.m. We'll help you implement what you learn, look at what you're doing, help guide you. And if you can't make the live session, don't worry. You can submit questions via a dedicated email bin, and then we'll help to answer those in the live sessions. So again, vectorvest.com/jumpstart. I look forward to seeing you there. Once again, thanks for taking the time, and please stay safe and stay healthy. Thank you.